So we're absolutely honored to have Jim Rogers here with us today. After attending Yale and Oxford University, Jim Rogers co-founded the Quantum Fund. During the next 10 years, the portfolio gained 4,200%, while the S&P rose only 47%. Mr. Rogers then decided to retire at age 37. Continuing to manage his own portfolio, Jim Rogers kept busy serving as a full professor of finance at Columbia Business School, and in 1989 and 1990, as the moderator of WCBS's The Dreyfus Roundtable and FNN's The Profit Motive with Jim Rogers. In 1990 to 1992, Jim Rogers fulfilled his lifelong dream, motorcycling 100,000 miles across 6 continents, a feat that landed him in the Guinness Book of World Records. As a private investor, he constantly analyzed the countries through which he traveled for investment ideas. Jim Rogers also embarked on a Millennium Adventure in 1999, passing through 116 countries. Jim Rogers is also the author of many highly acclaimed books, such as Hot Commodities, How Anyone Can Invest Profitably in the World's Best Market, A Bull in China, and The Future of Japan. Thank you for joining us today, Mr. Rogers.
Oh, I'm delighted to be here. That invitation was much too long, but let's go.
Excellent, thank you. So our first question is, which metal and which non-metal commodity are you most bullish on today, would you say?
Well, that's a very good question. I guess if I had to pick something, and I don't have an answer to you, but I'm trying to scramble around and think of something. Well, silver. I mean, silver's down 50% from its all-time high. I'm not buying it at the moment, but I do plan to buy more silver. Agriculture's down. I am buying agricultural ETFs because that's a simple way to invest. But something like sugar is very depressed. I mean, sugar's down 70% from its all-time high. There's some very depressed things out there.
Yeah, absolutely. And you said that you were bullish on silver, but you're not buying it now. Can you clarify why you're deciding not to buy it now?
Well, silver and gold have gone up a lot. Gold much more than silver, and normally when things go up a lot like that, there's a correction. We've been having a correction for a few months now, and I'm not very good at market timing. I'll just try to, when silver's down enough and gold is down enough, I'll buy more of both. I will probably buy more of silver because gold is maybe 10% from its all-time high and silver is down 50% from its all-time high. But in the next few years, I would expect that precious metals, gold and silver, will have a huge run because we have a lot of problems coming.
Yeah, that makes a lot of sense. Can you discuss some of those problems as well? Like, what do you see the biggest problems in the coming years?
Well, you may remember or read about 2008, we had a huge economic problem, stock market problem, investment problem all over the world. And that was because of too much debt. Debt was very, very high, and it led to huge problems. Itai, since 2008, the debt has skyrocketed everywhere in the world, everywhere, even China. China had very little debt 20 years ago, but now there's huge debt everywhere. And so the next time we have a bear market, and we're going to have one, it's going to be terrible. Throughout history, we've had periodic economic problems, investment problems, and we're going to have more. And it's going to be worse because the debt is so much worse all over the world.
Yeah, that makes a lot of sense. And then sort of another issue would be the population pyramid. You have less workers now supporting sort of older generation workers who are on pension plans, who are on Medicare plans. Is there any country that you see that's sort of going to be able to sort of escape this issue? Any developed country that's going to be able to escape this issue? Because a lot of places as well, the birth rate now is below 2.1. So they're projected to have declining populations as well.
Well, yes, that is a problem. We have demographic problems facing many countries. Population has been declining since 2010, and the debt has been skyrocketing since 2010. Other countries have similar kinds of problems. Some are not so bad, but even in Africa, where the birth rate is still 6 or 7 kids, I mean, that's down from 9 or 10 kids. Saudi Arabia, the countries that still have high birth rates, the birth rates are down a lot from what they used to be. And yeah, there are demographic problems certainly facing Europe, Japan, other countries I mentioned. If you're looking around for countries that are places to invest, No, you're asking, well, who will escape the problems? I mean, Venezuela will escape because Venezuela is already a catastrophe. It's not going to get much worse no matter what happens. North Korea is probably going to escape. It's not going to get much worse. Zimbabwe is an unmitigated disaster, so it probably won't get much worse. But no, I don't know. China seems to be doing a less bad job, both with the virus and with their economy, than Western countries. I presume, I hope that will continue. It's hard to find a place now that's going to escape.
And does
Some
that
will be less affected than others, is perhaps the best way to put it.
Yeah, that makes a lot of sense. And does that affect how you think about investing in these countries? Like, will you be very hesitant to invest in countries that really get a lot of the revenue from like Japan or Italy or Spain, where they're projected to be most affected by this declining population, probably?
Well, as I look around the world, Japan is probably the worst right now. Taiwan is beginning to have the problems. I live in Singapore, but Singapore does have some immigration. And so that while they have a very low birth rate, they do have some immigration, which helps offset it. The US, we have a birth problem, but we have a lot of immigration, legal or illegal, which helps offset the problem. But if you look around and you look at the demographics of what's happening in the world, people aren't having babies. And if they are having babies, they're not having nearly as many babies as they used to. I mean, China had a one-child policy for a while, which is now affecting them. They've changed that policy, but it's a little late because people still aren't having babies in China.
And you've traveled all over the world. Why did you end up deciding to move to Singapore?
Well, for 30 or 40 years, I've been telling people, you better teach your kids Mandarin, Chinese, because it's going to be the next great country in the world. Then I had one, and we were teaching her Chinese in New York, but I realized if I was serious, I was going to have to live in a Chinese-speaking city. We tried the Chinese cities, but they were terribly polluted. They still are terribly polluted. So we moved to Singapore. Everything works in Singapore. They speak Mandarin, they speak Chinese. I don't speak Chinese, so this was a good place. I speak English, and you know, they speak English and Chinese, so it seemed to be a good choice. And so far, so good. We're very pleased here.
Yeah, it seems to be a great choice. And where geographically today do you see the best opportunities to buy undervalued stocks? I've know you've spoken about Russia in the past as well.
Well, Russia has been hated by everybody, certainly by most investors. And I was negative on Russia for decades. I changed my view 5, 6, 7 years ago. I see that something had happened in the Kremlin, some change of attitude. I can surmise, but it doesn't matter. Something changed. And so I have been investing in Russia, continue to invest in Russia, have huge assets. They're not a gigantic debtor like the US or many Western nations or Japan. So they have some, hopefully, great possibilities going forward. But as I look around the world, I mean, I mentioned things like Zimbabwe. I mean, I bought a few shares in Zimbabwe recently, not even enough to remember, because I've learned that you should buy disasters. Zimbabwe is a disaster, but as I look around the world right now, I mean, most markets are up a lot, and I'm having trouble, other than commodities, I'm having trouble finding things in which to invest. Bonds are certainly a bubble. Bonds have never been this expensive in the history of the world. Property in many places, if you go to Korea or New Zealand or parts of America, you know, property is certainly turning into bubbles. Stocks, many stocks are becoming bubbles. Amazon goes up every day. Tencent goes up every day. Samsung goes up some stocks. Not all stocks are a bubble yet, which is why I'm not getting out of the markets. Commodities is the only thing that's cheap still.
And so you discussed that there's a change in Russia that's really changed your attitude towards investing there. Can you further discuss what that change was, please?
Well, for decades, centuries, if they didn't like you, they just shot you and took your assets, or put you in jail and took your assets. If you were lucky, they just shot you. If you weren't lucky, they sent you to Siberia for decades and took your asset. but something happened, and I could see that they were beginning to welcome investing and even foreign investing. They were very keen on foreign investors. I met some CEOs of non-Russian companies that said they like doing business in Russia. It's very easy to do business in Russia. So I could see that something happened. The Russian government set up a fund that they would invest with you if you wanted to invest in Russia. If you made money, they made money. If you lost money, they lost money. They didn't just shoot you, they lost money. So that was a gigantic change after decades of communism and czars and lots of other things.
Yeah, that makes a lot of sense. The power of incentives is obviously very powerful. And when you invest in Russia, do you have sort of a specific framework that you're using where you're saying like there's only certain industries that are attractive to you, or certain like capital structures where there are, let's say, like very high dividend paying companies or commodity companies only, or sort of what's your framework for investing in Russia?
Well, I'm a lot simpler than you are. I just try to find something that's cheap, where there's a positive change taking place. I don't put a label on it. If I can find cheap and change, something that's cheap, where there's a positive change taking place, wherever it is, whether it's cotton or Russian shipping or Chinese wine, whatever it is, that's basically how I would like to find things.
Yeah, so I heard you discussing that previously as well, the Chinese wine. Can you go a little bit further into your thesis on that? Because it seemed like I looked at some of the companies, and it's interesting because the multiples are high. So I'm interested in seeing like how you see them as undervalued, because I think it's a very interesting sort of way.
Well, I'm not. Are you talking about Chinese wine, or are you talking about Maotai? Those alcohol companies in China are extremely expensive. I'm talking about grape wine. I'm not talking about rice wine. I'm talking about grape wine, because I don't think the grape wine companies are terribly high multiples. And that's partly because, you know, the Chinese don't have a history of drinking grape wine. In America, we didn't have a history of drinking grape wine 50 or 70 years ago. Now everybody drinks it, and there are lots of people who know a lot about it. And so the world changes. My view is that the Chinese, as they become more prosperous, more sophisticated, are going to drink grape wine. And there are some companies in China which produce grape wine, which is quite a shock to most people. Most people don't know that you can buy grape wine, that there are grape wine companies in China. But we'll see. My view is that someday everybody's going to know about Chinese grape wine companies. They're all going to talk about them and drink them, and I'll get rich, or my children will get rich.
Yeah, that's very helpful. Thank you. I didn't understand that there's a distinction between the rice wine and the grape wine. And how long is a typical investment holding period for you usually?
Well, I like from something that it's forever, so I don't have to sell. You know, that's work. If you have to sell it someday, I'm a simple person. I like to find things that are very cheap, where good changes are taking place, and you can own them forever if you get it right. I mean, there are companies like that. There are stocks like that, and so the ideal for me is I own it forever. Of course, there are many things that I wind up selling, but the ideal is then I don't have to worry about it.
Yeah, that makes a lot of sense.
When I say I don't have to worry about it, of course I have to worry about it. I mean, I don't have to worry about going through all the necessary research and the practice of actually selling it and paying the taxes.
Absolutely. And how do you find yourself generating stock ideas?
Well, that's a good question, and there's no simple answer. When I see a disaster, I have learned that maybe I certainly feel sorry for whatever's happening, but and actually the Asians have a word. In China, it's Wei Ji, and it means that disaster and opportunity are the same thing. Interestingly enough, the Koreans have the same word, the Japanese have it's the same character. It's pronounced differently, obviously, because the languages are different, but all the Asian countries have this concept, this word, that disaster and opportunity are the same thing. I have learned that. I haven't been around as long as the Chinese, but I've certainly learned it. And when I see a disaster, it does make me start to think, okay, well, wait a minute. Is there something that I should investigate in looking at? Some things just walking down the street, I say, oh my gosh, look at that. you see something change or something interesting. The internet, you're just walking down the street. Oh my gosh, look at this. What is this? And you learn about it. Governments, you must pay attention to governments, because if a government decides to do something, even if they don't do it right, and they probably won't, they're going to spend a lot of money trying to make the change. And if they spend a lot of money, somebody's going to make a lot of money, and you might as well be one of them as they're trying to implement changes or new ideas. And then, of course, whenever I see a tree growing to the sky, when I see something that's wildly high priced and a massive exuberance and a bubble forming, then I do start to investigate to see if I should sell it short. So there are various ways. I mean, who knows how I have found that usually when somebody gives me an idea, I lose money. I don't know why. I guess I jinx it. If I buy it too, I lose money. I jinx it.
And what's your advice for student investors who are very serious about trying to find sort of undervalued ideas? Where should they be looking? Should they be looking where there's some sort of either sort of political unrest or some sort of disaster situation, and in like smaller cap stocks in those types of markets?
Well, Itai, if you want to be a successful investor, you stay with what you know. Now, everybody, student or not, knows a lot about something. When you go on the internet, you go to some sites. So if you were in a doctor's office and there were 500 magazines, what would you pick up to read? Fashion, sports, cars, what? I mean, my point is everybody has some things that interest them and that they follow and that they're passionate about. You're ahead of me already. If you pick up the fashion magazine, I don't know anything about fashion, I don't care. But you're going to know when something changes long before I will. You will know what's going to work because that's your passion and you pay attention. So when you see something like that, do more research and buy the stock. That's how you're going to get rich. Now, it may sound boring. If you want to be rich, be boring.
Yeah, that makes a lot of sense. Thank you. And can you discuss sort of how you value commodities? And as an example, maybe use copper. Because on the one hand, copper's had sort of a run up. And on the other hand, it does seem like there's going to be sort of a massive boost in demand over the next decade, and that supply may become more constrained. So how do you sort of balance that?
Well, you just used the right word, supply and demand. It's a little different from investing in stocks. What you have to understand is the supply and demand situation. And if you can figure out that there's going to be a shortage, you're probably going to make a lot of money. You mentioned copper. Looks like we're going to have electric vehicles. Well, apparently electric vehicles use several times as much copper as a normal vehicle. So if that's the case, there's going to be huge demand in the future for copper. And then if you do a little more research, you'll see not a lot of copper mines coming on stream. Copper hasn't been a hot subject for a long, long time. So there may well be big shortages of copper going forward. Likewise, lead, these cars apparently use a lot more lead and lithium, and silver, as you probably know, solar power uses a lot of silver. So there are various and sundry ways to figure out the supply-demand situation, especially for things like metals, because it takes a long time to bring a mine on stream. It's not quite like even building a bridge. You can do a bridge a lot faster than you can build a big mine. And so if you can find supply and demand imbalances with metals, you'll probably make a lot of money. But anything, whether it's cotton or copper or whatever it happens to be.
And do you prefer usually investing in the commodity directly, or do you prefer sort of finding a company that is like a miner, for example?
Well, if you can find a company that's going to find a copper mine in Berlin, you should buy all you can, okay? Because if you own the company, you'll get huge leverage and multiples and everything else. Now, problem is there are thousands of silver mines, thousands of... Mark Twain, you remember Mark Twain? Mark Twain once said that the definition of a gold mine is a hole in the ground with a liar at the top. Well, Mr. Twain lost a lot of money in a gold mine, obviously. There are hundreds of mines out there. So you have to be careful. It's not that easy. The simplest way is to buy the futures of a commodity, because you get great leverage, huge leverage. You can go broke in an afternoon, or you can get rich in an afternoon if you can do the futures. Or if you can buy the company, again, you get huge leverage if you get the right one. The problem is you got to get the right company. Mr. Twain would tell you, be very, very, very careful. It depends. If you like the outdoors, become a farmer. I mean, farming has got a wonderful future in the future, going forward. So yeah, there are many ways to play. Depends on the commodity.
When you said if you find a mine in Berlin, why did you choose Berlin? Is it because it's like a developed country, so you feel
if you find it in Providence? I mean, if you find it anywhere, if you find a company anywhere that's going to have a great copper discovery, please, especially if it's in an accessible area, please let me know.
Okay, excellent. And also, how do you think about oil? Because on the one hand, because there's just a negative stigma, it feels like investments been really going down and sort of creating new oil mines. So there might be a shortage soon. On the other hand, maybe in the long term, there's going to be declining demand trends as we switch to more renewables. So how do you sort of balance those factors?
Well, known reserves of oil are in decline and have been declining for a while. Fracking came along and changed the supply demand. And for a while, fracking was a bubble. If you could spell fracking, people would give you money to invest. Now that bubble has burst. Everybody know, oh, they got to make money. Because many of the frackers lost money or went bankrupt. Fracking's still here, but in the meantime, known reserves of oil continue to decline. The fracking bubble has popped. So I would suspect that energy prices, oil, especially oil, will continue to rise for a few years. Not every day, obviously not every quarter, but known reserves have been declining and continue to decline, especially in Saudi Arabia and many other countries like that. So I own some oil ETFs, and energy ETFs, and I probably will continue to.
And that's interesting. So why do you prefer owning, let's say, ETF over owning, let's say, an individual oil stock?
Because I'm lazy. You get an enormous, you can make a lot of money if you get the futures right, and the ETFs I buy are futures ETFs, and maybe I'll get it right. But for me to go out and try to research hundreds of oil companies, you remember what Mr. Twain said, this is not easy. So an easy way for me is to buy energy ETFs, metals ETFs, agricultural ETFs.
Yeah, that makes a lot of sense. Thank you. And can you discuss your experience co-founding the Quantum Fund and sort of maybe some of the challenges and major moments that you had when running it?
Well, that was 50 years ago, long time ago. There were two of us. We had a secretary, so there were three of us. We didn't have much money in the room, but we had some money in the room. We had to do something. So we both loved the business. We were both passionate about the business and loved it. And I did a lot of research. He was a great trader, and we had some success and used a lot of leverage. I don't use much leverage now, but used huge amounts of leverage, and we got it right and had a success.
Yeah, absolutely. And so what would be your advice to students who aspires, let's say in the future, to start their own like hedge fund or mutual fund?
Well, be sure you're ready. There's nothing worse than getting too early. I'll tell you a story. When I was early in the business, my first couple of years, I had a gigantic success when everybody around me was failing and going broke. And so I thought I knew what I was doing. I tripled my money in 6 months, and then 3 months later, 4 months later, I lost everything. because I really didn't know as much as I thought I knew, and I have learned a lot since then. But my main advice is wait until you really know what you're doing. Put together a track record, and then if you're any good at it, you can attract money and you will probably have a success.
Yeah, absolutely. That makes a lot of sense. And how
But
do you sort of choose?
I just want to say it's not as easy as it looks. You know, everybody turns on the internet and says, I could have bought Apple. It's not that easy. Just I want you to know it looks very easy, especially these days. A lot of new people are coming into the markets and they're telling their friends, this is so much fun and so easy and you make so much money. Be careful.
Yeah, thank you for that advice. And if the dollar loses its global currency reserve status, what do you think will replace it?
Well, I don't know. I have to deal with that every day, of course. No currency has stayed on top more than 100, 150 years in history. They all have moved on. The dollar's been on top for a while. The dollar has huge fundamental problems. We're the largest debtor nation in world history. It has political problems. You know, a world reserve currency or international medium of exchange is supposed to be neutral. But now if Washington gets angry at you, they put sanctions on you and you can't use the dollar. Well, many people are saying, wait a minute, that's not what an international medium of exchange is supposed to be. So they're looking for replacements or competitors to the US dollar. If I had to pick one now, I would say the Chinese currency, but that's a little absurd. The Chinese currency is a blocked currency. It's not even freely convertible at the moment, but it is a huge economy, a huge country, big numbers. If they ever make it convertible, and they're making it more convertible slowly over the decades, I would say the Chinese renminbi, but I don't have to decide right now because the dollar is not about to disappear tomorrow.
Yeah, absolutely. And so you discussed earlier investing in Zimbabwe, which has a good amount of political instability and other instabilities. How do you sort of overcome that? Do you have a specific way of sort of analyzing those, or is the stocks just so cheap there that you think that it more than accounts for that?
It is a catastrophe, and I've known about them. I've been in Zimbabwe a few times, and I've known about Zimbabwe for a long time. I have learned that if you invest in a nation that's a catastrophe, normally if you have the staying power, 5, 10 years later, you look like a genius. You really do well. And Zimbabwe has been at times very prosperous. It had a guy named Mugabe who ruined the country. He started in 1980, more or less. He took power. In the next 40 odd years, he ruined Zimbabwe, ruined it. But back to what I said, if you find a catastrophe where there's something good happening or bad stops happening, Mugabe's dead now, it might turn into a good investment. You have to have staying power, and you cannot expect to be looking at it every day, every month, every quarter, because it takes a while for these disasters to iron out.
Yeah, absolutely. And since you're investing in disasters, do you find yourself needing to have sort of a larger stock portfolio, like more stocks in your portfolio, like relatively be more diversified, or do you run like a fairly concentrated portfolio, would you say?
Well, diversification is something that brokers came up with so they wouldn't get sued. If you want to get rich, you focus, you concentrate, you put all your eggs in one basket. You better have the right basket, and you better watch that basket very, very carefully if you want to get rich. Henry Ford didn't diversify. I mean, after he got rich, he did. The guys who founded IBM didn't diversify till after they got rich. You focus, you focus, you focus. And if you have the right basket, you're going to get very rich.
Yeah, that's very interesting. Thank you for that advice. And so when you traveled around the world and went to different countries and motorcycled, can you discuss some of the key lessons that you learned about different countries?
We're all the same. Everybody is, when I got to country X, they would say, where have you been? I'd say, oh, we were over here. I would say, oh my God, they're terrible. How did you survive? You should have been killed. They're dangerous, horrible, evil people. And then they would say, well, where are you going next? I said, oh, we're going here. Oh my God, you are crazy. You're definitely going to get killed there because they're horrible, disgusting, evil people. You know, we're all terrified of each other. We all want the same things. If we could all sing and dance and drink beer together, nobody would be scared of each other, shooting each other. We all want the same things for our lives. We want the same things for our children's lives. It's amazing how similar we all are, but it's also amazing how terrified of each other we are. And politicians love to stir it up. It's easy to blame foreigners for any problems. Foreigners have different skin, different language, different religion, different food, different clothes, different everything. So it's very easy to say, it's the foreigners, the evil foreigners. And politicians all over the world throughout history love to do it. All of it, but we're all the same. If we could all go drinking every night, we'd have a wonderful time and no wars.
Yeah, absolutely. I wish. And do you find any sort of difficulties investing in, let's say, in some of these countries where the company might not have any English financials or anything? Or do you just, I guess, either have someone translate them for you or translate them through some translators and like that?
Well, yes. And often I have been one of the first in some countries when the markets open. And of course, they don't have, you know, big auditing firms or anything else. But at this stage of my life, I can pretty much read an income statement and a balance sheet, no matter what the language. You know, the numbers, they all put the numbers together the same way. The assets are on the left, the liabilities on the right. I've learned about the numbers. But yeah, no, of course, you need someone to translate it because you need to read the notes as well. But yeah, listen, it's sometimes if you're the first, it's a great advantage because things are very cheap, but also there's a lot that you don't know because they're not accustomed to publishing or publicizing various things.
Yeah, that makes a lot of sense. Thank you for that. And what are maybe some other industries that we haven't spoken about yet today that are hated by the markets, but you like personally?
Well, whenever we've had this virus, and so, you know, transportation, tourism, travel, shipping, a lot of these things got beaten down. One reason that I'm interested in Chinese wine companies, people stop going out, stop going to the bars, etc. So if you can find things that are down a lot whenever there's a catastrophe, I mentioned catastrophes before, you may find good opportunities. But also, obviously, there are huge changes taking place in technology these days. And if you understand them and can find the right ones, you'll make a huge, huge fortune. My problem is I'm not very technologically gifted, forget gifted, not even knowledgeable. You know, I could go to Silicon Valley and not find anything. Oh, there are hundreds of things out there to invest in. I just wouldn't be able to figure them out.
Yeah, thank you for that. And as our
I repeat, I repeat you, don't invest unless you know what you're doing.
Okay. Yeah, thank you for that advice. And as a concluding question, throughout your career, what do you believe were some of the most pivotal financial and economic events that really changed the way that you think about investing?
Well, you have to watch central banks. Most of them don't know what they're doing, but since they have so much money, I own Japanese shares right now, and ETFs, I should say. Japan has huge problems, but the head of the central bank goes to work every day, prints money. He says, prints unlimited, that's his word, unlimited amounts of money. And he buys ETFs and bonds and stocks. Well, look, he's got more money than I do. So if he's going to buy ETFs, I'm going to buy ETFs. So you have to watch those guys. Again, not that they necessarily know what they're doing, but they got so much money that they can make mistakes. I told you before, if you watch governments too, you can find opportunities. And these days, we have to watch the virus because many markets have become not bubbles yet, as I said before, but they're getting there. and the central banks keep printing money and the governments keep spending money. And so bubbles are developing. So you have to watch the markets and feel the pulse of the market, which you will learn with experience. Right now I see a lot of things happening that always happen in bull markets. I told you about all the people, the new people coming to the market, and they tell their friends it's easy and fun and you can get rich. So something called SPACs. SPACs have been around for a few hundred years. Well, they come around again at the end of a bull market. Well, SPACs got very popular all of a sudden. Another sign of a coming to the end. All of these things have happened before. I would urge people to read market history if they're interested in markets, or certainly economic history, so they understand the world. Most of this has happened, not most of it, it's all happened before. And once you have some experience and once you've read a lot, you'll know what to look for.
Excellent. Thank you so much. We really appreciate you taking the time to join us today. This was a tremendously helpful session.
It's my pleasure. I'm a great fan of Brown University, so keep up the good work, and let's do it again sometime.
Excellent. Thank you so much. Can't wait. Have a
Very
great day.
good. Thank you. Thank you. Thank you. Thank you. Bye-bye.